Hi, my name is Brenton Harrison with Henderson Financial Group, and we're here to talk about 5 questions you should ask yourself before buying your next home. Let's get started. Number 1 is, are you being realistic about pre-approval? There's a big difference between pre-qualification, where you give a very limited amount of information to a lender and they give you an estimate for how much home you might be eligible to purchase, and pre-approval, where they are actually telling you up to what amount they'll give you for that home. It does give you a leg up when you're looking for a property, but that doesn't mean that you're required to borrow the full amount that they've given you the approval for. If you know that you're going into a situation and the bank might have given you this much loan that you can qualify for, but financially it makes sense to only borrow this much, don't get pigeonholed into thinking that you have to go to the max of that approval. Make sure that whatever home you're buying fits into your budget, and ignore what the bank tells you if it doesn't truly fit into your financial plan. Number 2 is, will you have any savings left after the move? There's no worse feeling than being in a situation where you have an emergency that you need to provide for, but there aren't enough funds to do it. And it's tempting to go into a house and put everything you can towards that down payment to make sure that you have the lowest monthly payment as possible. But you do need to remember that an emergency fund will be needed even after you move into that home. Make sure before you use that down payment that you consider how much you'll have in savings after the move, and that's after the down payment. But also, if you're like me and you're not the type to take old furniture into a new home, estimate how much it will cost to furnish the place that you're moving into. If you know that you're going and getting fresh furniture, you need to have an idea for how much you're willing to spend. And if you're taking things from that old home and moving it into the new home, you also need to estimate what the moving costs would be so that you don't overextend yourself when moving into that new property. Number 3 is, can you afford the entire payment? We've all been suckered into figuring out how much home we can afford by going into Google, finding some random calculator and plugging in the amount of money that we want to borrow and the interest rate. And we say, oh my goodness, I can afford some $1 million home, when in actuality, there are a number of things that many calculators leave out of their calculation. When you move into a home, in some form or fashion, you have to pay taxes on that home or the property. You also have to pay homeowners insurance. You might have to pay PMI or even a homeowners association amount that could be added into your payment or is still due at some point throughout the year. Always make sure that when you're doing those calculations, you rope in all of the things considered in the payment to make sure that it fits into the element of your budget that allows you to achieve the other elements of your financial plan. Number 4 is, can you afford the repairs and upkeep associated with your property? If you're going into a home and you know that it's somewhat of a fixer-upper, see if you have a contractor friend or someone who can give you an idea for the amount of money that might be needed to get that home ready to sell if you were going to turn around and sell it to somebody else. You want to have an estimate of those costs, but you also need to be aware that throughout the year, even with a new home, there is just annual wear and tear that's going to require you to come up with some funds. That's part of the reason that it's important to have an emergency fund, but it's also a reason that you want to make sure that your payment isn't keeping you from doing other things that will give you a little wiggle room within your budget. If you can, see if you can get a warranty on some of the items that might be big ticket items, like a washing machine, a hot water heater, even a roof. But even if not, try to build in a little bit into your budget so you have an annual maintenance amount that you can add into savings or add into an account that'll be there when you need it. Number 5 is, are you maximizing your other investments? You want to make sure you're not house poor, where you're putting so much money into a property that it keeps you from contributing to the other areas of your financial life that can help improve your net worth, like a retirement account at your job, paying down other debts, even an emergency fund. So if you're buying a home, make sure that you have enough leeway in your budget that you can contribute to your other areas. A house can be a good investment, but it's not one that always works out. But unfortunately, if you put too much into that property and it is your only investment, it has to work out because you're not doing anything else with your finances. You also want to make sure that you can have enough in your budget to afford the insurances that you would need. Life insurance in the event that you die and your loved ones still have to pay that property, and disability insurance so you can still pay your mortgage if you're ill or unable to work. Make sure you have that in your budget and go into that house buying process with more confidence and more comfort in knowing that you've made a good decision.